It is always a good idea to establish what you can afford before starting your house hunting adventure. Obtaining a pre-approval for mortgage financing can save you money, time, and huge disappointments. Your first step is to establish how much cash or down payment is needed and how much you can afford to carry in monthly mortgage payments. Caution should be used when dealing with lending institutions, as shopping for a mortgage may cause damage to your credit rating if the lenders you visit all complete a credit check. When shopping for a lender, it is critical that you not only look for the best interest rate, but also the best terms and conditions of the mortgage that will best suit your situation. Always be aware of what the penalty is to pay out a mortgage early and what your annual prepayment privileges are. For example, can you pay down the principal portion of your mortgage by 10% or 15% or more? There seems to always be confusion with the difference between pre-qualification and pre-approval. Understanding the difference between pre-qualification and pre-approval is essential to a successful home purchase. Many times, consumers will inquire with the lending institution as to how much they can afford and are given a verbal on the mortgage amount that they would qualify for. In many cases, we've seen buyers hugely disappointed after they've put an offer on a property, only to find out that after a full application has been done and a credit check carried out, that they've been turned down for financing. Pre-qualification establishes how much you can afford to borrow based on how much you earn and owe. However, remember, pre-qualification is not an assurance of mortgage approval. Pre-approval advantage can give you bargaining power. Pre-approved buyers can have increased bargaining power with the seller as they're perceived as serious buyers and bring to the table a certain level of credibility. Quick decisions can be made, which is attractive to the seller, especially in a multiple offer situation, potentially placing your offer to buy in a first choice position. Mortgage pre-approval will help you stay within your price range. There's no use looking at homes that are out of your afforded price range. It will only frustrate you and waste your time. It also confuses your knowledge building process, as it may interfere with you making that right decision. We need to compare apples to apples. Most realtors have adopted a policy that they will not show you homes unless you are pre-approved. There are always hidden costs to any home purchase. It is also important to know what these additional costs may or will be so that you can properly budget to have the additional funds on hand. Additional costs may include building and other home inspections, appraisal fees, mortgage insurance, CMHC fees if a high ratio mortgage, legal fees, land transfer tax, title insurance, taxes, etc. These amounts are over and above the cash down payment, and you must budget to have these additional funds available. One of our trained buyer specialists would be happy to help you determine what these hidden costs may be specific to your buying situation. Knowing what documents you need to have ready for submission for your mortgage approval will save you time. Most lenders will ask for a notice of assessment from your previous taxation year, a letter of employment, T4 forms, proof of down payment. Remember, the difference between pre-qualification and pre-approval. Pre-qualification will define the numbers. Pre-approval will show you the money.